necessarily know many projects that are actually completed using blockchain. So I thought I'd highlight a few here today just to give you some ideas. The first one is a really interesting one coming out of the States, and it's being done by Walmart and Nestle, and there's a few others, and I think they're calling it food tech or food chain or something. But the whole key with this is that they want a system where there can be a number of parties, and there are generally a number of parties involved in these food supply chains, and they want all them to be transacting and putting information on the same platform. And their goal with it is so that they might be able to, for example, let's say that they find out that in South America there's been some food contamination from one province. If they get this platform off the ground and up and running, it may be that all the food producers and sellers in their consortium will be able to trace which pieces of food have come from that area in South America and what shops they've ended up in, and actually get them off the shelf a lot quicker than currently. Because currently, Walmart have their own system, Nestle have their own system, and all their suppliers have their own systems all the way back to the farms. And there's several projects that are doing similar things around the world. There's one from here in Australia called BlockSense, and there's another called AgriLedger, I think, which are two worth checking out if you're interested in this area. But they're building a very robust system for auditability and traceability on a level playing field for all the people involved. Another one's in a port in Rotterdam, and Rotterdam is one of the busiest ports in the world. So that's up in the Netherlands, and they get a lot of port traffic coming through there, and it's kind of a hangover from the old days when the Dutch kind of sailed all around the world. But the port system there, they've come up with a blockchain-based system where all the suppliers, all the shippers can be engaged on a level playing field on the platform, and they've actually started to put little IoT devices in all their little cargo containers, which will automatically report information to the blockchain. And they've got temperature sensors in some of them as well to make sure they're going through compliance. And apparently all the parties are really finding it very useful because it's meaning that they can exchange information a lot more freely. And they're not having to put up with everyone's different system and send emails to each other and print things out and pass them to the port regulators. Everyone's really on that same playing field, and they're seeing a lot of benefits from that. Another one is, and this is an Australian project that did this. This was a company called PowerLedger, who've been around for a little while now. There was a disaster in Puerto Rico, I think about 2 years ago. They had a hurricane hit, and it wiped out a lot of their power network, and as well as some of the suppliers. So even some of the suppliers got hit and taken out. And when they were trying to rebuild it, the PowerLedger guys got in touch with them and said, hey, we've got this technology which may actually help incentivize your citizens to rebuild the system quicker. And the way PowerLedger works is they don't actually commoditize finance, they commoditize power. So whenever, they've built an algorithm so that whenever you give power to the network, it gets essentially commoditized in certain units on the network, and they call it tokenization. So they become essentially power tokens. And so you could be a big power company, and you could be sending your power to the network, and you could be getting tokens in exchange. But you could also be someone with a few solar panels wanting to send your power to the network. And before this, and you know even from here in Australia, there's not a lot of visibility into the power process. You generally just get your check in the mail, or you get your bill in the mail, sorry, and you pay it. But what they've found with this system is as more and more people have been hooked in, and because it's an open system where people have visibility, people are actually coming up with some really creative ways to buy and sell from the network. And a lot of the citizens have been spending a fair bit of money going out and getting themselves solar panels so they can sell to the network. And some really smart people have actually been buying batteries so they can take power off the network, off-peak times and pay a lot less for it, and then sell it back to the network in on-peak times, or at least just use it. So that's been a real success story. One a lot of people have probably seen is this concept of blockchain bonds. This system just got rolled out by CommBank and the World Bank. I think it was only this week or last week that CommBank and the World Bank together issued the world's first blockchain bond. And they're essentially building a private instance of Ethereum, and they're building a bond system on that instance. And their goal with that system is to essentially have a lot more traceability and security around bonds. And I was talking to Jason earlier, and he was talking about, I think was it Mission Impossible or Lethal Weapon you were talking about, where they...
The first Die Hard.
First Die Hard.
With bearer bonds, yeah.
Yeah, and he was saying that all these paper bonds were flying out of the sky, jumping on a roof, and everyone was picking up, and because that bond entitled them to the holder to $1 million, all these people had got these bonds, and they weren't really entitled to the bond, but because that paper was the only evidence you had, they could go and cash them in when the time came. Whereas with this system, if you're putting it in a blockchain-based system, you can quite easily show who has the ownership over that bond, and you can also control the transfer of that ownership to other people. So if I wanted to buy a bond off someone else and say, I'll buy a bond off you for this much so I can exchange it in a couple of years' time for the money, I could get that ownership transferred over on this ledger, and because it's a distributed immutable ledger, I can have a lot more confidence in that. And so that's the motivation behind it. The last one I'll touch on is a really interesting use case. I only saw this pop up this week. This is a company called AXA who do a lot of the flight insurance around the world. They've built a blockchain-based flight insurance system where any customer who buys flight insurance, if their flight's delayed by over more than 2 hours, the moment the flight company logs that in their system, and some of them are even reporting it automatically from the actual airport traffic management systems. The moment that's logged, then the contract will automatically pay out the insurance amount to the customer, which is a really interesting use of it, and it makes a lot of sense. You've obviously got to trust the information coming in that's causing that payment, and that's a whole different topic which I won't go into today. But it's meaning that any of these customers can log onto the blockchain and make sure that they are getting the payment they deserve, and it's apparently being met with a lot of success so far. There's a lot of other applications. These are some of the applications built on the public Ethereum network. I could talk about some of these for a long time. A couple of my favourites are down there in that corner. Aragon, which is a governance system, and Decentraland, which is actually a decentralised gaming platform, which is really worth a look. But there's a lot of development going on with blockchains currently. One question you do need to ask yourself when you're looking at using blockchains is whether you need to go public or private. And what I mean by public or private is that public networks are essentially what I was talking about with Bitcoin and Ethereum, where you have these large public networks that are open to everyone. They're built as platforms for everyone to use, and have complete auditability, and anyone that wants to use the network, all they've got to do is create an account and they can use the network. And so on the left there are some of the public networks, and I won't go into them, but there are a lot out there. A private network, on the other hand, is more like a permission network, and it's kind of more similar to what we know with our current business systems. It's a bit more centralised, and generally what you do with a private network or a managed blockchain network is you say, we're still going to distribute this amongst a number of parties, but it's going to be more of a consortium, or it's going to be more a group of businesses. And anyone who has permission to be on this blockchain can engage with us, and we'll all engage openly, but you've got to get permission first. You've essentially got to get the keys to the blockchain before you get all the benefits of the blockchain. And so there's several ways that people are doing it. These hyperledger ones are generally where people are setting them up themselves, but there's also some managed services as well. I won't touch too long on the private versus public, but this is generally a comparison of the two. If you're going to be building or considering building with blockchain, it really is a question you do need to deal with, and these are some of the pros and cons of both. A public blockchain, you get a large distributed ledger, you've got wide development, you've got a lot of people involved, you're really secured by the decentralisation, and you've got a lot more interoperability because there's people all around the world. But your code's generally public. There are some ways to hide it. They're typically a lot slower than the private chains, and they're generally a lot more difficult to integrate into your current systems because you're dealing with a global system that you don't have a lot of granular control over. It can be quite difficult to integrate something you've done previously into the new system, whereas with the private chains, you've got more control over them. You can have private data on those blockchains if people are prepared to trust them. You set the rules, they're generally faster, but you're also responsible for all the updates and security, and that's a big one. And you're generally more vulnerable to hacking as well, because you're a smaller target. With these public chains, you're a small needle in a very large haystack. With the private chains, you're a lot bigger needle in a lot smaller haystack. And I always put down the bottom here, a normal database may be better. and that seems to be the way with a lot of these things is there is a tendency for a lot of people to want to sprinkle a bit of blockchain on everything. and you'll see it a lot. I saw recently there was a company called Long Island Iced Tea, and their share price had been going down for the last few years, and they changed their name to Long Island Blockchain. And their stock price went up like 40%. So you've really got to ask what you want to achieve. That's the big question you need to be asking yourself. And especially when it comes to choosing your blockchain platform, there needs to be a lot of thought going into what you're actually wanting to achieve by using blockchain. There are many benefits, but it just may look differently to what you think it might. And I'll touch on a few questions you need to ask yourself in a little bit. I just wanted to touch really quickly on where we're at currently with the ecosystem, because I think it is really important to highlight that we're still really early on in the piece. And a few people I talked to before this session had similar observations. They said, look, we've looked into a little bit, but it is quite early. And I like to say that the railroad tracks and the roads are still really just being laid down at the moment. Some trains are starting to run on the blockchain tracks, but they're generally the early adopters. And they're the guys who have just really started doing this, and we're still nowhere near wide-scale adoption of a lot of this technology. And like I said, not everything needs a blockchain, so a distributed database even might suffice. It just really depends on the use case, and yeah, again, just resist the temptation to instantly jump to a blockchain solution, because it may not necessarily be what you need. But I do truly believe that along with AI, blockchain might be the biggest digital innovation for business we're going to see in the next decade or two. I think the fact that you can create a trusted layer for parties to exchange value and information between each other on whatever scale you want, that really can't be understated, because that's something we haven't had. And the ability for you to then automate that exchange of value and that exchange of data in some really interesting ways means that as this technology matures, it's going to make a lot more sense for a lot more projects to at least consider having some kind of blockchain element to them. And it may not be fully running your own blockchain and spinning up thousands of nodes. It may simply be having an endpoint to a public blockchain, so people can draw from your database, or so people can interact with your business in some meaningful way on these public networks. So a few questions you really should be asking yourself if you're looking at this as a project manager and you're saying, okay, this all sounds good, but how do I approach this from a project perspective? There's a few questions you should really be asking yourself. The first one is the business I'm working with currently conducting international transactions? I think that's probably the most simple use case of blockchain you can possibly get, because using a public network, I could send money to Jason up the back there from my phone, and he'd get it pretty much instantly. But I could also send that money to someone in England, and they'd get it at the exact same time. And that's the real beauty of a decentralized network, is that you don't have to worry about borders. You don't have to worry about legacy payment systems. You don't have to worry about SWIFT and all these other issues that we get currently with trying to send money overseas. I can tell you from my profession in law, we've got some really archaic trust accounting regulations, and to even send money to New Zealand, to refund money to people in New Zealand, is an absolute hassle, because they still say you have to use checks, which is just it's mind-boggling. But that's the kind of legacy systems we're dealing with, and so international transactions is one that really makes sense. But probably the other biggest question you can ask yourself as a real starting point is, do we have trust or visibility issues in our relationships? And that can either be relationships with other businesses, or it can be relationships with customers as well. Because the killer app for blockchain, I think, is that trust layer. It's that ability to say to the other side, we're coming with our hands open, you come with your hands open, and let's meet in the middle. And you're going to be able to see everything we do, and we'll see everything you do, and we'll automate on that basis. If there are trust or visibility issues, then blockchain may make sense for your project. Another thing to ask is there any wastage? Are we double handling? Are there middlemen involved? Or even excessive administration in your monetary processes? And I think that's another way. We touched on that smart contract example before, but you can apply that kind of principle to pretty much anything. Are we paying people to act as middlemen? That's another thing. I mean, once you start realizing that you can automate these relationships, you can start saying, well, are there transactional relationships where there's party A over here and party B over here, and And party C is kind of just sitting in the middle of greasing the gears between the two. You know, can we now move around party C and get that function out of some code? That's something that you can consider as well. Could you benefit from having code govern the agreements with other parties? And that's really moving into smart legal contracts. I'm talking about those active agreements I talked about before. And what you really need to be thinking about with that is, are there parts of our agreements that we can automate using code, especially if it's touching money, that will prevent someone from doing the wrong thing, and will kind of enforce our agreement with each other in a proactive way. So we don't even need to worry about you doing the wrong thing because it's impossible for you to do. Do we have silos information in any kind of multi-party workflow? So if you are in the situation where you're dealing with a bigger institution or someone that has a centralized database, and you've also got someone you do a lot of business with who has their own database, maybe you can begin to consider merging those two in some kind of meaningful way. Would you benefit from a level playing field or a common source of truth in the project? That's another one where blockchain may make a lot of sense. And last one, could you benefit from building an open digital structure, especially if the project's global? I think we're starting to see a real trend with what's called decentralized autonomous organizations. And they're essentially organizations that are hosted on public networks, and they're governed by smart contracts. So several people or several hundred people from around the world in some cases will come together and say, we all agree on these rules, so let's enshrine that into contract. Because we're doing it internationally, it makes a lot more sense for us to put it on the blockchain rather than to write it somewhere in some country and follow in the local court. So that's something else to consider as well. I've got a few use cases here. I won't spend too long on these because I want to get to questions, but like I've said, decentralized autonomous organizations is one of the big ways that you can start. You can start considering organizing projects in different ways. You can also consider automating your relationships within your projects. Traceability is another big one within project management that I think you can take a big look at using blockchain. Reliable transactions. Supply chain management, we've touched on that with the other supply chains. Smart assets is one we haven't really talked about, but smart assets, you could even look at those bonds as a type of smart asset. If they exist on a blockchain and can be transferred to other people, they're representing something in the real world. And we're starting to see this a lot with housing registries, for example. And I think in Sweden, they're trialling a blockchain-based housing registry where every house will have an entry on a blockchain. And the transfer of those housing titles will be able to occur online. And that's what we're doing with smart assets. It's essentially taking real-world product and giving it some kind of existence on the blockchain. Smart legal contracts is another one that's worth considering. Registers and ledgers, active agreements, which is what we talked about before. If you're handling money, if there's a system you've got where there's escrow or payments that need to be made, and you need to make sure that everyone can rely on those payments being made, having a contract account govern that and waiting for the conditions of the contract to be met may make a lot of sense for your project. And it might be a way to avoid having to deal with custody of money and several other issues. Obviously, I'd recommend getting legal advice when you start talking about custody of money, but it's definitely something to look into. Managing your risk and managing the flow of information is another way that you could be using it in your projects. And like I said, removing intermediaries is a big one. So where could you go next? I've tried to distill as much information into this session as I can, and I do apologise if we felt like we were rushing through. But what I generally say is the best thing you can start doing is start listening to podcasts. I've found the most useful information in this sector are on a number of podcasts. And so Software Engineering Daily is one of the biggest podcasts for the IT sector in the world, and they did a whole month on blockchain. So if you can track that down, I really recommend having a listen to that. Epicenter is another one. I've got the podcast that I run there as a shameless plug, but we really try and deal with this at a beginner level and try and cover a different element of blockchain systems each week. We've lost the computer again.
I think you got a shameless plug in. No, that's good.